How are we doing, everybody? Welcome to the next part of the market structure course. Now in this section we're going to be talking about weak and strong highs and lows within the market. So hopefully you've had a chance to watch the other market structure videos that we've put out, and you would have heard me talk about weak and strong highs and lows. You might have heard me say we've got a protected higher low, or we've got a protected lower high, or we've got a weak higher high or a weak lower low. And these are terms around protected and or weak and strong highs and lows within the market. Now, understanding weak and strong highs and lows within the market is so important. Like we said, every single thing that we teach within structure, within supply and demand, it's all as important as each other. And you want to get a good understanding of how everything works. Now, how weak and strong highs and lows are within the markets are essentially what we're going to be using to understand where we can potentially be targeting in regards to structure, you know, where our protected levels are, where our weak levels are, and it helps us to understand swing points on a whole and build together trade ideas based upon obviously the swings that we've got, the weak highs, the weak lows, and then the strong highs and strong lows. And what we have is, when we talked about swing structure across multiple time frames, as we went through, like we showed, we had the daily higher time frame, and then like the 4-hour time frame, and then like the 15-minute, and how we piece them all together. Each one has protected and weak highs and lows within the market, and your strong and weak highs and lows are in regards to your swing structure. Now, we haven't gone through complex pullbacks just as yet, but we're going to go through swing structure and internal structure in another video. But what we need to understand is, when we talk about strong and weak highs and lows within the market, this is in regards to our swing structure, and we're going to go over it in detail when we're on the charts. And obviously, again, once you've gone through the other sections such as swing structure versus internal structure, it'll all start to make a lot more sense. But what I'm trying to get across with the point here is, think about the previous videos that we had, and just think about when we are in a bullish trend, which is what we can see here. We have an expectation, as you knew that we said, we don't ever expect the high low to get run if a bullish trend is to remain. So remember, we said we have a higher high, then we have a higher low, and then we have a higher high, a new one where the old higher high gets ran, where the higher low never gets broken. And then what does this do? This puts in a new higher high, a new higher low, and then a new higher high. So what I'm just going to do is just talk about what we've got going on right here and the theory behind strong and weak highs and lows within the market. So when we're in a bullish trend, we know that we're looking for these higher highs and higher lows to be put into the market. We can see here that we have a new higher high within the market. Now, we know that when we talk about the higher low of a bullish trend, we know that we expect it to not get broken, which is what is part of a bullish trend. So when we get this breaker structure right here, okay, to the top side, and we put in a new higher high, this now confirms to us that we have a new higher low within the market. And what this means is that this is a protected higher low. And what this means is, if you remember what we talked about in the last videos, if you remember when I turned around and said that we have a high, the swing low is the lowest point before the breaker structure. So what you want to do is, once you've had the breaker structure, you go from the swing high, you see where the lowest point within the market was, and then that is your new protected higher low. So what this means is if we know that a bullish trend is to continue, we know that we're expecting these higher lows not to get ran, and these higher highs are going to consistently get taken if this bullish trend is to remain. Now, we're going to tie this in with expectational order flow in another video, because expectational order flow links in with all of this. Because what we do is, like we said in the multi-time frame analysis video, is that we know that we use our time frames to help identify different swing structures within the market. We use specific time frames to help us identify the swing structures, such as like the 15-minute, the 1 hour, the 4 hour, the daily, the weekly. Like I said, these time frames are not specific to the point of saying, you know, all they do is they help you understand the swings within the market. And what we do is we use expectational order flow along with things such as the structure and the weak highs and lows to put together these trade ideas. So like we said before, we've got this higher high within the market. You know, we put in this new higher low, and it's given us this breaker structure, or this boss. So it's now the lowest point that's led to the breaker structure is now your protected higher low within the market. So what we expect from here now is we've got this new higher high. So like we said before, let's just pretend this black line is the higher time frame structure, and then we get now a breaker structure bearish on a lower time frame, such as, let's just say this is the 15-minute. Okay, now we know, obviously using our multi-time frame analysis, that this is indicating we're getting some sort of pullback. But what we understand is that currently that this higher low is protected. As long as this bullish trend is to remain, longs or bullish plays are still valid until this low goes, because we are still overall in a bullish trend. So what this means is that as long as bullish market structure is to remain, the protected higher low should not get ran. So we can see we start to pull back, and then we've mitigated some form of demand here, which we'll go into in another video. And then again, we've had a change of character, which again will make sense in another video. But all a change of character is that first shift in trend. So we can see here that we were bearish, and now we've switched to bullish. And this is all again internal structure, but want to just keep it focused on protected highs and lows. But what happens is, as long as this bullish trend is to remain, this protected higher low should not get ran, and that's the concept. But what we have here is a weak high. Now we have the expectation, and when we'll go into it again deeper in expectational order flow, with this weak is high, so this is currently our target. So we have that expectation that this high is going to get ran because it is weak. So when it comes to protected highs and lows, they're areas that, as long as the given trend is to remain, that low or high should not get broken. So if we can see here, now we've put in a new higher high, we've pulled back, we've come in and mitigated some form of demand here, and then we've had this change of character, and then you can see now we've gone on and broken structure. So if we were to identify the new protected protected low in the market, it's obviously the lowest point that's led to the breaker structure, which is that right there. Let me just change that back to black. Okay, so now we've got this new protected higher low within the market. So this now is no longer a protected higher low, because this is now a protected higher low. So what can we expect to happen next? Well, we can expect then to see price pull back, and as long as this bullish trend is to remain, this protected higher low should not get ran. So trade ideas are still valid for longs until this higher low gets broken. Okay, so we can see here that this is the protected higher low within the market. Okay, so we have the expectation that this low should not get ran, and then this high is weak. So we have, again, this is a weak high, and we expect this, essentially this is a target until we get a breaker structure, which then confirms to us that we get this new higher low within the market. Now, just going on back to the points of what we had before, if you remember us saying that when we put in bearish market structure, right, and we try and put in a new high, but we fail to break swing structure. So let's just say we come up and we do this, and we fail to break above it. So let's say we wick above this, okay? We haven't confirmed that this breaker structure here is a confirmed breaker structure, because we haven't broken through this, as you remember, with a candle body. We want to see a nice candle body break, but let's say this just wicks the high, and then we've had this change of character. So what we can denote now is that this is now a weak low within the market, because it's failed to take out swing structure. So now what we can expect to see is because this is weak, because it's failed to take out the swing high, we can expect this to get ran, and then we can expect, overall we've got to understand is that we are still within bullish market structure between this high and this low. This is still our protected low within the market, and we do not expect this low to get run, and we always consider it as valid until the low actually gets broken. So then we can expect possibly this low to get ran, and then if it does, and then we break structure, and then we go ahead and get that breaker structure, this will then give us, I'll just move this across just to make it easier, we'll then have this breaker structure to the top side, and then this will then give us now our new protected higher low within the market, which is this point right here. And then obviously again, if we then start to pull back, we can then obviously say that this is now our weak high, and price is to continue on in this given trend. This is the target, this is the weak high, leaves behind a new protected higher low within the market. So that is the example of how we look at it within the bullish trend, and then let's just look at it now in the opposite, which is going to be this bearish trend. So as we can see here, we've got exactly the same thing. It's exactly the same thing, but in reverse. So we can see here that we've got a lower high into a lower low. We've put in a new lower high, and then a new lower low, a lower high, and lower low. This is obviously this just basic market structure within the market. Now what we can see is that we've had this lower high and this lower low. The lower high is come and put in a new one here, and then a new lower low. Now as we can see that we've marked down here, the lower lows, if price is going to continue in this bearish trend, the lower lows are weak and the lower highs are strong and protected. So we can see here we put in a lower low, price pulls back, we then mitigate will be some form of supply here, and then we get this change of character, which is that first indication of a trend change. As you can see now, the expectation has now broken, because now we've had this internal shift where it's now turned bearish in line with the bearish swing here. And obviously, what do we expect now? We can expect to see that for this low to get run. So we can see here, once we get this breaker structure of this lower low right here, we can see now we've put in this new lower low. So what this means is that this has now left behind our new protected lower high, because this is the highest point that's led to the breaker structure. So like we said, what we expect to see now is that this high here is protected. We do not expect this high to get run, and we don't assume that it will get run. We always assume and understand that it is protected until it's violated. So we have until this high goes and bias that we expect this swing structure to come short. So what does price do? Price comes back in, puts this new lower low in, and we start to pull back. And because we understand that the lower low is weak, the protected lower high is strong. So we expect price to come and put in a new lower high before a new lower low. And you can see how this will piece together and sort of make sense with what we went over in previous videos. So we can see we put in a new lower low, price was pulled back up, put in a new lower high, it's mitigated some form of supply, which we'll go into. Like I said, we get this change of character, and then we put in a new lower low within the market. So once this new lower low again gets broken and we get the breaker structure, it's the highest point that's led to the breaker structure, which is this now here, is this lower high. So we can now denote this lower high in the market as the new protected high. So again, we can understand that this is no longer the protected high, this is the new protected high. We've put in a new lower low. So what can we expect? Once again, we can expect to see a pullback, and we have an expectation, and I'll go into it more in detail when we get onto expectational order flow, that price should pull back. We mitigate some form of supply, and then we expect to come and see the new weak high, the weak low get ran, because we understand when we're in a bearish trend, we have weak lows and we have these strong highs. Now, once again, if price pulls back, like we know, and then price tries to put in a new low, and let's just say this wicks below this low, it doesn't break through convincingly with the candle body like we'd like to see. We just get this wick break, and then we start to put in this bullish market structure. We understand that this is not a confirmed protected higher low within the market, because we need to see a higher low break swing structure. So price here has put in a new lower high. It's tried to put in a new lower low. As you can see, it's the highest point that's led to the break, but we've just wicked it. We haven't broke through with a convincing candle body. So because it hasn't broke through convincingly with a candle body, we can denote this as a weak high. So what can we expect? This isn't a protected high within the market. This high now becomes weak because it hasn't broken swing structure. Okay, so then what we can see is that price might come pull back up again, come further into some sort of supply levels, and then we get this break here, and then we follow order flow down. Again, we'll understand this when we get into it, and then now we've had this new break of structure to the downside following this break of structure right here, which leaves behind our new protected lower high within the market. And again, the same thing applies. As long as this trend is to remain bearish, we have an expectation that the protected high should not get ran, and that we have a weak low, that the weak low should get ran. We expect to come and see a new lower high in the market before we come and break structure, take the weak low, and the protected high doesn't get ran. So obviously anything between the swing points of, say, we'll go up to here, so we have this swing high and this swing low. Everything inside of this range, essentially here, this is all sort of internal structure to the swing structure, and we still have an expectation that this low should get ran and this high should not get broken. So until this high, for example, in this case, gets ran, we are still bearish. Okay, so we still have an expectation to see a new lower high within the market, and that this high should not get broken. And then it works the same thing before as well. We have these new protected higher lows within the market. Once we break structure to the top side and leave this new protected high low within the market, until this protected low gets ran here, until this protected low gets ran, we have this expectation that no matter what happens within swing structure, okay, that this is a protected low, and as long as this remains intact, no matter what happens with internal structure here, no matter how messy this looks, we understand that our higher low and our protected higher low is the point of validation that confirms to us that we are still bullish. So if this was to break here now and turn bearish, let me just hide this to make this a little bit cleaner. If we now understand, because this was our protected higher low within the market, we can see we've had this breaker structure bearish now, because obviously this was our higher high, our higher low, our higher high. Okay, so then we've had a breaker structure of our protected higher low. So this is our breaker structure now. So where is our new protected lows and protected highs in the market? So let's say price pulls back. We understand, because this was our swing higher low, we had a new higher high within the market, and then we've had now this breaker structure bearish. So this point here has gone from a weak higher high to a strong lower high within the market. So this is now our protected high within the market, and we know that this is our target, because this is our weak low, sorry. So we know that we have this expectation just from this swing structure. Let's just say now price pulls back, okay, and we start pulling back. We know that between this point here and this point here is our swing high to swing low. We know that this is our protected high, this is our weak low. We expect that this protected high should not get round because it is protected. So short bias trades and ideas are completely valid, as we see if we continue to pull up. Okay, so anything up until this protected high goes is valid for shorts. So once we get this, we understand that obviously we are bearish. We expect to see a new lower high in the market before we put in a new lower low in the market. So we can see there we had the bearish breaker structure. We put in this new weak lower low. The expectation, obviously this being a protected lower high, we expect to see a new lower high within the market. We now had this break of structure, which has now left us behind a new protected lower high within the market right here. And obviously we understand once again it's the highest point that's led to the breaker structure, and then this leaves behind our new protected high, and this one is no longer protected because this is our new protected lower high within the market. So that's the theory behind weak and strong highs and lows. What we're going to do now is take it over to the charts and see and adapt it and apply it, and yeah, we'll take it over to there.